Good morning, students. I am Dr. Nitin Kumar Agarwal, Associate Professor, Timit Institution, Moradabad itself. I welcome you all to today's session of Financial Accounting. Today's session will cover the journal entries, as this is the primary book with the name of journal. So sometimes students get confused that how to prepare or how to make the journal entries. And what is the journal entry? The very first question is, what is the journal entry and what are the rules regarding journal entries? As you are following the double entry system, so you must be familiar with the rules of accounting, the rules of generalizing the business transactions. What about the classification of accounts? Because on the basis of rules under the different accounts, you will be preparing the journal entries. So today's topics definitely are covered under today's session, and you would be able how to make the journal entries in the books of accounting. So the very first thing is that classification of accounts. The students who are going to make the entries, who want to generalize the business transactions in the primary book, they must be familiar with the classification of accounts. Basically, accounts are classified into three categories for making the journal entries. The first is personal account, and second one is real account, and last but not least the nominal accounts. Personal account refers to individual, firm or company accounts, and real accounts, you can say the assets and properties are included under the real account, and nominal accounts are those accounts which involve the expenses, losses, incomes and gains. So when you are going to prepare the journal entries, you must be aware of the rules. So what are the rules of making the journal entries? When it comes to personal account, it means debit the receiver and credit the giver. You have to consider that who is receiver in a particular business transaction and who is giver, because you have to make a particular party debit when receiver is there, and if there is a giver, you have to make that particular party credit in your entry. And what about the real accounts? Real account, it means you have to consider the assets, properties. For example, tangible assets we are talking about, as if you are going to buy some furnitures. So furniture is the real asset. You can say it is the tangible assets, you can see, you can touch. So such kind of the transactions would be treated under the real accounts, and as per the rules of the real account you have to make the entry. And nominal accounts, where you will see that expenses, losses, incomes and gains would be considered over there. So for example, if you take the salary, the wages, the commission or interest, so these transactions would be treated under the nominal account. Basically, when you are going to make any entry, any journal entry, it has some components. So what are the components of journal entry? The date is there, the date on which the transaction occurred or took place in the business. Debit and credit, two sides are there. As you know that we are following the double entry system. So under the double entry system, you have to make a particular account debit, and other side the second account which is impacted by the transaction would be credited over there. And as you have to write, you have to mention the monetary value of the business transaction. So amount you have to mention in the journal entries in the debit and credit side. And at last you have to mention the narration, as it is called a brief description of the transaction, so that the user of accounting, if they get some doubts or they get some confusion, so by observing the brief description in the form of the narration, they can make themselves satisfied exactly what is the transaction. For example of journal entry, you can raise the loan. As you are seeing that loan taken from a bank, it means there is a particular transaction, you have taken a loan or your organization has taken a loan from bank. So exactly what would be the entry? You can see that on 13th June, because you have to mention the date, the debit account is the bank account. It means the bank account, because when you are raising the loan from bank, the bank balance would be increased, so bank account would be debited over there as per the rules of journal, and the loan, it is the liability, so it would be treated as a liability and would be shown in the credit side. So exactly what is the entry? Bank account debit to bank loan account or loan account, and you have to mention the amount 50,000. So basically these are the components of the journal or the journal entry when you are entering any transaction in this primary book. So journal entry, you can say it is the business language or the accounting language, basically you can say, because you have to mention in the books of accounting all the records, all the transactions which took place. So systematically, you have to record the business transactions in the form of journal entries, because other books or further the you have to make the ledger. Suppose you have to prepare the ledger on the basis of the journal entries, and the financial statement would be prepared with the help of the ledgers. So ledger would base on the journal entries. So it is the responsibility of accountant to go for accuracy, and every transaction which is needed, which is required to be recorded in the books of accounting, should be systematically recorded, and every aspect of journalizing the business transaction should be considered, and as per the rules of accounting, as per the rules of journal, or you can say the golden rules, you have to consider, as I told you earlier, that the accounts are classified into three categories: personal account, real account, and nominal account. And there are some rules under these accounts, and you have to consider these rules when you are going to make the journal entries. So how to make the entries? First, for example, we take some transactions, business transactions, right? So I approach to Excel, MS Excel, and you can see that different business transactions are given to you, and you have to make the journal entries. The very first transaction on 1st May is given to you: paid electricity bill by check. It means how to make the journal entry of this particular transaction. So electricity bill is paid by check. It means you have to consider that this is the expenses, because the very first condition of generalizing the business transaction is to identify that exactly what is the account, what particular head is there, how will you make this entry on the basis of the rules. But before that, you have to consider that which is the transaction. The transaction is related to expenses, incomes, assets, liabilities, or any person or a party particular is given to you in the transaction. So you have to identify this is the case of the expenses, because you are paying the electricity bill. So let's go to make the entry, right? And the very first thing is you have to mention the date, that is my first, and electricity bill paid. So electricity expenses account debit, right? And to bank account, right? So how will you make the entry on the basis of the accounting rules? The very first thing is that you have to identify that what is to be debited and what is to be credited. So here you see that electricity bill was paid, so this is the expenses. So you have to write this particular electricity expenses as a debit and to bank account, because the bank balance is reduced by rupees 800, and now you have to mention the amount 800, and in the credit side also 800. So what would be the narration? Electricity expenses paid, right? So this is the particular expenses you paid. So this is the transaction, and you made this particular entry. And second transaction, as you observe, is purchased a computer on credit from XYZ Limited rupees 25,000 on 2nd May. So May 2nd, you have to mention the date again. And because what comes in, you are buying, you are purchasing a computer system, right? So as per the real account rules, what comes in is debited. So purchased a computer on credit, so you have to write down, you have to mention here computer, because the computer comes in your firm computer account. Debit, right, to, because cash or any check is not given, right? It means this is the credit transaction. You are buying, you are purchasing the computer on credit, so you have to mention the name of the supplier or your creditor, right? So there is a name XYZ Limited, so you have to mention to XYZ Limited. And what is the amount? 25,000 you have to mention over there. 25,000. Okay. And what would be the narration? Purchased computer on credit, right? And now third transaction is on 3rd May, so you have to mention again the date, and you find the transaction paid for advertising expenses. So advertising expenses, debit, and to cash account, right? And what is the amount? Rupees 1200, rupees 1200. And what would be the narration? Advertisement expenses paid. Okay. So you have to keep in your mind that exactly what are the rules of making the journal entries, or what are the rules of different accounts. As I told you, 3 accounts are there. So in the background, you have to keep in your mind that yes, we have to follow the rules of journal entries on the basis of the accounts. So you have to determine what is the transaction, and basically the transaction related or relate to which kind of the account. Suppose there is a case of personal account, so rules of the personal account have to be applied, and if there is a case of the real account or the nominal account, accordingly you have to apply the rules of journal entries, right? And now again we see that there is a particular transaction on my 4. So my 4, and you find paid insurance premium by check. It means you are not paying the cash. There is no involvement of cash. You are issuing a check. So when it comes to the matter of check, the bank, right, you have to consider the bank balance. The bank balance is reduced over there. It means you have to make the bank account credit, right? So here you see that insurance premium is paid by check. So insurance premium is the expenses, and all the expenses are debited under the rules of account, and that account is the real or nominal. Definitely the nominal account, because the expenses and losses are debited under the nominal account, right? So paid insurance premium, here insurance premium account would be debit, and to bank or cash, yes, bank account, to bank account. And what would be the narration? Insurance premium paid. And what about the amount? Rupees 1000, and again rupees 1000. 5th May. On 5th May, there is a transaction, withdrew cash from bank for office use. Yes, you have to focus that the particular amount which is withdrawn from the bank, it is used for personal use or the office use. In this particular transaction, it is mentioned over there that for the office use, you are withdrawing the money from bank. So here there is no any particular case of the drawings, right? So office expenses you can say, so for office expenses you are withdrawing, but there is no any mention about office expenses but office use. So you can write that cash account debit, because you are withdrawing the money from bank. So cash account debit, and to bank account, because the bank balance is reduced by this particular transaction, and mention that cash withdrawn from bank, right? And what was the amount? Rupees 5,000, right? So 5,000 you have to mention over here, 5,000, right? And what about the next transaction? paid wages in cash. So this is again the issue that you have to identify the particular transaction, the particular account, and this is again the expenses. Paid wages in cash rupees 4,000 on 6th May. So first you have to mention May 6 and wages account debit to cash account because cash is reduced, cash is going outside, so what goes out is credited as per the rules, and this rules relates to which account, personal, nominal or real, because cash is the real asset, so this is the real accounts matter, and you have to mention right to cash account and cash account. Okay, and what would be the narration? The narration is wages paid, right? And what is the particular amount? 4,000 as per the transaction given to you, so you have to mention 4,000, right? And we come to next transaction, that is 7th May, sold goods for cash. May 7, it means cash account debit because cash comes in, right? And that was the transaction. Goods sold, right? Again we read it. Sold goods for cash rupees 7,000. So you have to mention to sales account and the amount is 8,000, and two times you have to write the amount in the debit side and in the credit side, right? 8,000. And what would be the narration? Narration would be that is goods sold for cash, because there is no mention of any particular party's name, and it is given to you that you are selling the goods for cash, so you have to write as a cash transaction. And if any name is given, so that time there is no need to get confused, because if the party name is given to you, but if it is clearly mentioned that cash, for cash you are selling the goods, so again there is no matter what the party name is given to you, you have to mention the cash account because it would be treated as a cash transaction, right? But if in your question or in the business transactions you find there is a particular name of any party from whom you are buying the goods, or the cash is not involved in that particular transaction, so you have to assume this is the credit transaction, so that time the party's name would be mentioned in the journal entries. Okay, and next transaction is on 8th May, sold goods on credit to Mr. C. Okay, that is the particular case as already we discussed. Sold goods on credit to Mr. C. Sold goods to, right? So we have to mention the date. My 8, Mr. C. Mr. C. Who is the party who is buying the goods from you. So Mr. C would be debited over there because you are selling the goods to Mr. C, and Mr. C is receiver. So as per the rules of the personal account, who is receiver? Receiver is Mr. C in this transaction. So you have to mention Mr. C, and Mr. C would be debit in as per the rules, and as you are selling the goods, so the goods is going outside, so what goes out is credited, so sales account would be credited in this particular transaction, in this entry to sales account. And what about sold goods to Mr. C rupees 8,000, right? So you have to mention rupees, again we have to check what is the amount. Okay, in the first transaction, that was the 7th May, right? It was the 7,000, so we have to correct that, it is the 7,000, right? And the next transaction is having the amount rupees 8,000, right? So we have made it correct, and in this transaction you have to write 8,000, and this is amount 8,000. Okay, and what would be the narration? Goods sold on credit, right, to Mr. C. So you have to mention this particular amount on 8th May. And on 9th May, you see that return goods to Mr. A. So this is the case of return. Mr. A is a party. You are going to make the return to Mr. A, right? So on May 9, Mr. A would be debit, and to what kind of the goods you return to Mr. A? definitely the goods which was bought by you are returning the goods. So here you have to keep in your mind that that is the case of purchase return, right? Because you already purchased the goods and that particular part or the maybe the entire goods is being returned to Mr. A. So Mr. A debit and to purchase return, right? So why we are mentioning the purchase return? Because the goods which was purchased by you, it's being returned to Mr. A. So this is the case of the purchase return. So you have to mention here the purchase return word, right? And you, as I told you that you don't need to write, there is no particular rule that you have to mention the goods. You have to use the term that is the purchase return or sales return, because in the case of purchase and sales you are writing in the journal entries the purchase or sales. So same case is here when you are returning the goods, so it would be called the purchase return. So Mr. A debit to purchase return. And what about the particular transaction value? You can see over here return goods to Mr. A rupees 1000. So you have to mention the value of this transaction rupees 1000, right? And what about the narration? Goods returned to Mr. A. Okay, so that was the particular transaction. And on 10th May, received goods returned from Mr. B. It is the opposite of the previous transaction. Received goods returned from Mr. B. So you are receiving the goods. It means what kind of the goods you are receiving, which was sold earlier to Mr. B by you, and Mr. B is returning the goods to you. So you are receiving the goods and Mr. B is giver, right? So on my 10th, this is the transaction, my 10th. It is the case of the sales return, right? So sales return account would be debit and to Mr. B, because Mr. B in this transaction is treated as a giver. So you have to mention B as the credit, right? We just take the amount. So this is the case of Mr. B, right? Received goods returned from Mr. B rupees 500. So you have to mention rupees 500. Okay. And what would be the narration? Goods returned by Mr. B worth rupees 500. So that was the case of sales return, right? And if you see the next transaction is paid telephone expenses, telephone bill by check. So you have to again mention that the telephone expenses, this is the case of expenses, rupees rupees 600, telephone expenses rupees 600. So you have to make this entry that telephone expenses account debit to cash account, right? And what would be the narration would be uh, telephone expenses paid. And what about the amount? Rupees 800 and 800. And the transaction occurred on 11th May, right? So you can see that telephone bill was okay. There was a mistake because you paid telephone bill by check. It is the case of check. So already I told you that if there is a case of check, so you have not to mention cash, you have to mention bank account. So we have to correct it, right? That is the bank account and amount was 600 rupees 600, right? So this is the case of particular transaction as you are making the payment by check, and on 12th of May you are receiving the cash from Mr. C. So in this transaction you are observing that cash is received by you. So cash account would be debit as per the rules of journal entries, because what comes in is debited. So cash from C you are receiving rupees 8,000, right? So you have to mention cash account from Mr. C. So you have to write to Mr. C. Okay, and the transaction narration would be cash received from Mr. C. Any doubt? I think you must be familiar with generalizing the business transactions in a systematic way. So you are receiving the cash from Mr. C rupees 8,000. So you have to mention rupees 1,000, and in the credit side again you have to mention rupees 8,000, and date was my 12. Okay, and my 13. If you take the transaction, you consider the transactions, you will find that paid for maintenance expenses in cash. So this is again the cash expenses, so you have to mention the maintenance expenses account debit to cash account, right? So entry would be there, maintenance expenses account debit, right, to cash account, and addition is maintenance expenses paid. And what about the amount? Rupees 800, right? So paid, sorry, 1300. So you have to mention maintenance expenses 1300, right? 1300, okay, no issue. 1300, it was the case, rupees 1300, right? 1300, okay. And now what is the next transaction? Deposited cash into bank rupees 10,000. So bank balance is increased and cash balance is decreased in this transaction. So bank account debit, or as per the accounting rules, as the receiver is the bank, so bank would be debit, and cash which is going outside, what goes out is credited, right? So bank account debit to cash 10,000, debit to cash account, right? So you deposited the cash into bank, okay, rupees 10,000, and on 15th May the next transaction is that bought is stationery for office use and paid cash rupees 700. So you are buying the stationery. Stationery is the expenses, not an asset, right? So all expenses are debited as per the rule of the real of the nominal account, right? So stationery would be debited in this case, and cash as goes out, right? So you have to make the cash credit. So stationery account debit to cash would be 700, stationery account debit to cash account, right? And what is the amount? It is 700, right? 700. So we have to mention the amount corresponding to the particular account 700. You are buying the stationery and cash is reduced by 700 itself. And what about the addition? Stationery expenses paid. Okay, and this, there was the date in the previous transaction, it was the 14th May, and the addition was that uh, cash deposited into bank. Okay, and in this transaction the date is the 15th of May. Okay, and already we mentioned that stationery expenses paid. Okay, and next transaction is on 16th May, received rupees 14,000 from X in full settlement of his account with balance of rupees 16,000, right? So exactly what is the case? First of all, you have to identify that Mr. X, right? The balance in his account is rupees 16,000. So it is the case of the debtor where Mr. X is having the liability to pay you rupees 16,000, but at present this is the transaction that there is a case of the full settlement, and it is assumed, right? It would be assumed that in the future he will not pay you any more amount because this is the time for the full settlement of his account. So right now you are receiving rupees 14,000 from Mr. X, right? But the balance was rupees 16,000 as per your accounting books. So how to make this entry? There would be a case of discount, because if you are receiving, you were to receive rupees 16,000, but Mr. X in full settlement of his account is paying you rupees 14,000 only, and it is assumed that in future no amount would be received and you are providing the discount. So here is the case of the discount, and you have to mention the discount in the debit side because it is the loss for you. So you are receiving the cash, right? So cash comes in. So cash account debit 14,000, discount account debit 2,000, and from which party you are receiving the cash, who is the giver under this transaction, you find the particular name, that is X. So the entry would be cash account debit 14,000 and discount account debit 2,000, right? So we have to mention, we have to make this entry that cash account debit, okay, and discount account debit and to Mr. X. So what is the amount? 14,000 you are receiving as a cash, and discount would be assumed as or you can subtract this particular amount 14,000 from 16,000, so you find the value of discount 2,000, and you have to mention the entire value 16,000 which was to be received. Okay, so what would be the narration would be that cash received from Mr. X in full settlement of account, you can mention, right? And what about the date? It is the 16th of May, so you can mention the date, right? So it is the particular transaction. So when you are making the entries, it is not very Herculean task that how to make the entries. If you are aware of the general entries rules, as I told you, that there are three types of the accounts and each account consists of some rules to make the entry. So you have to consider the entries. First you have to identify that what is the transaction, and transaction is related to assets, expenses, incomes, gains, right? Or it is involving some parties or not, or whether it is a cash transaction or credit transaction. So you have to keep you have to observe the every aspect of generalizing the business transactions in the primary books, right? So that was the particular case of the full settlement. As I told you, this is the new case for you all, I think, and because earlier the very basic entries were made by you. And now the next one is on 17th May, that is old newspaper sold for rupees 300, right? So old newspaper you are selling. So this is not the particular sale, because you this is not your job, or this is not your particular product you are selling to anyone. So this is just like the miscellaneous income. So you have to open this particular head, that is the miscellaneous income, right? So you are selling some scrap, you are selling some newspaper, old newspaper. So you have to open this particular account in the name of miscellaneous income, right? So you have to mention that cash what comes in is debit, so cash account would be debited over here, cash account, right, debit. And you have not to write down here, as I mentioned, that it would be not okay or proper to mention the newspaper or the sales account. You have to mention that to miscellaneous income, right? So miscellaneous income account. And what was the amount? I think 300 it was given to you, that yes, old newspaper 300. So you have to mention rupees 300 in the debit side and also in the credit side. And what is the date? Date is the 17th of May. And what would be the narration? Old newspapers sold, right? and 18th May. What is the transaction as per the question? Okay, you see that the new transaction. Okay, Jet debtor for rupees 1000 becomes insolvent, and 40 paisa in a rupee could be received from his estate by check which is deposited into bank. So if you are receiving any check, so that time it is assumed that you are receiving the check and you will deposit into bank, and already it is mentioned into the question that the check was deposited into bank, so bank balance was increased, so you have to write bank account debit. But from which party you are receiving this particular amount of check? Yes, of course, Mr. Jad, who is the debtor for rupees 1000. So you are receiving. So who is the giver in this case? The Jad is giver. So you have to make Jad as a credit as per the rules, right? And you are receiving the check. So bank account debit to Mr. Jad. Definitely the entry would be mentioned in your journal that you are receiving the check. So check was deposited into bank account debit. And yes, okay, there was one thing you have to observe, that if you are receiving the particular check or cash from any party, but it was the case of the insolvent, right? So what amount was to be received by you from Mr. Jed? The debtor was for rupees 1000, right? But you are receiving, because that person is insolvent and declare insolvent, so he is not paying you the full amount as per the requirement, as per the book balance. He is paying you only 40 paise in a rupee. You can see the 40%. So 400 rupees definitely received by you, and 600 could not be received, right? So it is the case of the bad debts, right? Yes, it is the case of the bad debts when you are receiving from any insolvent a particular amount, and the balance could not be received in future. So it is the case, and you have to mention here the bad debts. So the entry would be passed in your books that you are receiving the check. So bank account debit by rupees 400, and bad debts account debit, because it is the case of loss, and all losses are also debited. So bad debts, in the name of the bad debts, the loss would be mentioned over there, bad debts account debit, and you are receiving this particular check from Mr. Jet. Okay, so you have to mention to Mr. Jet. So what about the amount? Because the bank balance would be increased by 400, and bad debts, you see that 600 as calculated, and 1000 was to be received from Mr. Jet, right? So you can say the narration would be uh, check received from Mr. Jet as being insolvent, right? So you have to mention this was the case on 18th May, and 19th May the salary is due to clerk. Okay, again the new case, salary is due, you are not paying, right? So on 19th May salary is due, so salary account debit to outstanding or due salary, right? Outstanding salary account, right? Salary, right? So on 19th May, you see that this is the particular case. The salary is due to clerk rupees 10,000. Okay, rupees 10,000. We have to mention. So this was the new case for you all, that outstanding salary. Why we are mentioning the outstanding salary? Because you are not paying the cash for the salary. It is the case where the salaries are due, right? In the future, it would be given, or in the next year, right? So write down that if there is a particular case of due, so that is the case of the outstanding, right? So you have to mention before the particular head there is a salary, so outstanding salary. If the wages due, then the outstanding wages. If interest due, then outstanding interest, right? So this is the case of the salary due to a clerk, on 19th May, and next transaction is received 20,000 from Subhash, which were written off as the bad debts in the previous year. It means already there was a case of the bad debts in the previous year, and if you are receiving the cash, okay, so it is the case of the bad debts recovered. So this is the particular head you have to open in your account, bad debts recover account, right? So you are receiving the cash rupees 20,000, which was earlier treated as a bad debt, so bad debts recover, right? From Subhash. So you have not to mention the name of Mr. Subhash, but you have to write that cash account debit 20,000. It was received from the Subhash, but this was the case of bad debts recovered. So this is you can treat as an income. So two bad debt recovered account. Okay, so this was the particular case. You see that on 20th May 20,000. Okay, on 20th May. So you have to mention the date May 20 and amount is 20,000 and amount is 20,000 on the credit side as well, and you have to mention the narration that bad debts recovered. Okay, now what is the next transaction? Next transaction is depreciation charge on machinery. So this is again a very new thing for you, I think, that if you are charging the depreciation, so depreciation is treated in account as a loss, and as per the rules of accounting, all the losses would be debited. So here we have to mention this entry that depreciation account debit, and you are charging the depreciation on machinery. So machinery, when you bought the machinery, it was treated as an asset and was shown in the debit side, but now because you are charging the depreciation due to any reason, due to the use of the machinery on a regular basis, so there is a decreased value in the machinery, and you can calculate the depreciation as the percentage of the depreciation is given to you 10%. So by 10%, or charging the depreciation at the rate of 10% on 50,000 as a value of the machine, you find the depreciation value rupees 5,000. So what would be the entry? Depreciation account debit to machinery account rupees 5,000, right? So depreciation account, you have to make this account debit, depreciation account debit, and because you are charging this depreciation on machinery to machinery account rupees 5,000, rupees 5,000, and you have to mention the narration depreciation charged on machinery, and the date was 21st May. And the next transaction, you can see on the left side of the screen that on 22nd, the interest on capital rupees 2,000. So interest on capital account debit to capital 2,000. Okay, we have to make this entry on 22nd May, right? Interest on capital account debit to capital account, right? And narration interest charged on capital. And the next entry is 23rd May. It is interest charge on drawing, so it is the opposite of the capital. So drawing account debit to interest on drawing account, right? And we have to check exactly what is the particular value as per the question, right? So interest is 2000, interest on drawing 5000. So we mention the value 2000, right? And the interest on drawing was 5000, and the credit side again 5000, right? And what about the narration? That interest charged on. Okay, and the last transaction as per the question. Now I think you are familiar how to generalize the business transaction, and the last transaction is prepaid insurance premium 4000. Prepaid insurance, uh, okay, check it, because it is paid or prepaid. It is prepaid insurance, right? So again, this is the case like the outstanding expenses. So this is an asset, prepaid insurance premium. Already I have told you that this is the case of the assets, because in advance you are paying the premium. It may be related to next year. So insurance premium, right now it is not expenses. For the moment you have to treat as an asset, because it is related to future. So prepaid insurance account debit, right? And to insurance account, right? So it is 4000, right? So basically, because you are paying the cash now. Okay, okay, yes. Prepaid insurance account debit to insurance to, uh, okay, we mention here insurance, because prepaid insurance. Okay, so entry is 24th May, right? Prepaid insurance. Okay, so this was the particular transaction, and you can see that from very beginning I told you that whenever you are making the journal entries, you have to consider that what are the transactions, and what particular account or the head would be open over there when you are making the journal entries. And you have to keep in your mind the rules as per the accounts. And I told you that three accounts are there: nominal, personal and real. And the rules accordingly you have to apply when you are making the journal entries. So I think today's session will cover that how to generalize the business transactions, and the new transactions were involved in this particular question. And further in next session, definitely with more transaction, we would be making the entries into the journal, right? Thank you very much, and we hope that you would be doing very well with your generalizing business transactions. Thank you.